Come on here, oh, check. But this is the person that will climb on Sunday and go and be teaching.
Hello everyone, please, as you are joining, kindly mute your mic. Mute your mic as you are joining. Thank you.
Okay, good evening, everyone. Welcome.
Good evening. Good evening.
Good evening, sir.
Yeah, Abdulaziz, I've sent you the YouTube link. And can we mute ourselves? It's important. Hello. Who is this person? Okay. Good evening, everyone. You are welcome to tonight's class. So our time is fast spent. This is almost 30 minutes behind schedule. So your topic tonight or for today's class is preparation of financial statements for government accounts or for public sector. So can anyone confirm to me if you have had your YouTube link in the respective groups by now? For the majority of those people that may not be able to join.
Yes, the link has.
I mean the YouTube. Okay. So Mr. Aziz, you can start. That is let's start. Hello. Alhaji Aziz. Can you hear me?
Hello. I'm sorry, yes. I forgot to put on my mic. I was already speaking without putting on the mic.
Okay. Let the class start now. I can share your screen.
Okay.
Guys, please, there should be disturbance. Please, don't disturb. Thank you.
Good evening, everyone.
You can make up by yourselves.
Please, kindly confirm if my audio is very clear enough.
Very clear.
Loud and clear.
Okay. So, which means we are good to go, right?
Yes.
Yeah, good to
go.
Yeah.
Okay. Okay. Thank you. Good evening once again. My name is Abdulaziz as usual. And we are already a bit behind schedule. So we'll try as much as possible not to waste a lot of time. Our today's topic is preparation of financial statements. Mr. Kabiru, please allow me to be able to share screen.
Okay, let me try and do that.
So our topic for tonight is preparation of financial statements for government. No, it's not yet up.
Not yet up.
Okay, yes, I can. It's up now.
Okay.
Yes. I believe my screen is bold enough for everybody.
Yes, sir.
Okay, good.
Yes.
Okay, good. All right. So, like I said, our topic for tonight is preparation of financial statements for government, and we are going to go through this topic, I think, for maybe 2 or maybe 3 weeks, or 3 classes rather. Let me say 2-3 classes, because like we have known earlier in our earlier classes, I believe we still remember that we talked about the basis of accounting in the public sector. Let me see. Okay. Someone please remind me. I forgot something. I forget things very quickly. Someone remind me.
Okay. Can I try? Can I try?
Go ahead.
Okay. Yeah. So we have the cash basis, we have the accrual basis, we have the commitment basis. We then have the
Yeah,
modified.
yes. Go ahead, please.
Okay. We then have the modified cash basis and
Yes,
the
go ahead.
modified
Go ahead.
accrual basis.
Okay, good. Good. Thank you very much, Mr. Ola. Abiola, anyone. So we have the cash basis, accrual basis, commitment basis, the modified cash and accrual basis as well. All right. So, but basically, like I mentioned also in that class, that the most common one that are being used are the cash basis and the accrual basis. All right. The modified basis, they are just kind of bases that were used when, during the transitioning period, when trying to transition into the modified accrual basis, or modified basis were being used when trying to transition into the full accrual basis, so that they will just break from cash and then enter accrual like that. So our main focus will basically be on the accrual basis and then the cash basis, because we still have some government institutions, government organizations that are still using the cash basis, even though a lot of them, especially the federal government, the states, a lot of the state government as well, are transitioning, making substantial efforts to fully transition into the accrual basis, which we said is quite the best form of basis for accounting. All right. So we'll look briefly at the cash basis, and then we'll look deeply as well into the accrual basis. Okay. So, but before we go forward, let's look at the end of this. Sorry, the end of the notes I have here. I want to try and show something at the end of this notes. Okay. At the end of the note, I tried to bring out. I started from the Pathfinder, some past question reference in respect of this topic that we want to discuss. Okay. And I want you to look at this topic, these past question references, and observe something. You see that most of the time when I want to test this topic, is usually in the compulsory question most of the time when they test it. It will usually be in the compulsory question. So, which means this topic is not something we should toy with. It's something that is important for us to pay important attention to. All right. Now, let's go right into it. Now, for preparation of financial statements of government using the cash basis, generally, whether you are using whatever basis you are using, even if you are using market women basis, the preparation of financial statement for government is the responsibility of who? The Accountant General of the Federation or of the state that is preparing it, or in the case of local government, the local government treasurer. Okay, and the way they prepare it is that they gather the accounting transcripts from the different agencies that form that government. Accounting transcripts remain by each agency preparing their own domestic financial statements. They prepare their own statement of all the statements in the financial statement, all right? So each agency, each ministry, department prepares their own financial statements locally and then submit to the Accountant General. And then the Accountant General now consolidates all these financial statements together to form the financial statement of government. So apart from that, foreign missions, in the case of federal government that now have foreign missions, we also prepare their own, they will join it together with it. And then the Accountant General have branch offices in all the states of the Federation. They call it Federal Pay Office. Some of us might know it. They call it Federal Pay Office, headed by a Federal Pay Officer. So this office also prepares the financial statement of the activities of the Accountant General that they have been doing in those branch offices and then sends it to the Accountant General. So the Accountant General consolidates all this data together and then prepares the financial statements for that particular period. Now, if you are now talking about financial statements under cash basis for government in Nigeria, what are the components that forms the financial statements? So what are the what account and what account are they expected to prepare to form their financial statements? So by the requirement of IPSAS, the government organizations in Nigeria are expected, who are running on cash basis, are expected to prepare, by requirements, they are required to prepare at least 4 accounts, 4 statements that are compulsory. That is the statement of cash flow, which is also known as the statement number 1. They prepare statements of assets and liability, which is statement number 2. Statement number 3 is the statement of consolidated revenue fund. Statement number 4 is the statement of capital development fund. Now, these 4 statements are compulsory for them to prepare if they are running on cash basis. Then, additionally, for you're not hearing, somebody says he's not hearing anything. Please, others, please confirm. Is it so? Is it the record breaking from my
We can hear
side?
you.
Yes,
I
sir.
hear you clearly.
Yes, sir. It is
We
very
can hear
clear.
you is from his side.
Okay, thank you.
It's very breaking.
Okay, thank you very much. All right. Is the record breaking?
We can hear you.
So, additionally, they are also required to prepare notes to the account, just like in private organizations, when private entities also prepare their financial statement, they're supposed to prepare notes to the account, then performance reports, statistical reports, statement of accounting policies, also note on treasury bills. Now, let's talk about all these statements and talk about what they are in their real sense. Now, the statement of cash flow, and I'm sure we are familiar with this, is just a statement that shows the cash movements of an organization in a particular period, for a particular period, their cash movement, that is the movement of their fund, of their monetary resources, cash and cash equivalents. That is, when we say cash and cash equivalent, we're talking about physical cash, that is the one in the Naira notes, and we're talking about cash in the bank. We're talking about money, cash equivalents, like items that are very liquid and easily turns to cash. Okay, so talk about checks, talk about bills, and so on. So the statement of cash flow is just a statement that shows the movement of cash and cash equivalents of an organization for a particular period. Okay, and the statement of cash flow, the interesting part of it is that both for accrual basis and cash basis is not different. It's still the same thing, because the cash flow statement itself is a cash basis account. Even if you are running accrual basis, your cash flow statement will be prepared using cash basis. So if you are using, I don't know if I said that correctly. If you are using accrual basis, any organization, be it private or public, even if you are using accrual basis to prepare your accounts, your cash flow statement will have to be prepared using cash basis. There's no other corner to it, because the cash flow statement does not recognize any other transaction or any other item except items that involve movement of cash. So that is why those of us, maybe, I don't know if these have been taught in FR, if you are familiar with preparation of cash flow statement, you will always remove depreciation, because depreciation, we all know, is not a cash expenses. So the cash flow statement is a statement that shows the cash movement in an organization, and it is prepared under 3 headings, which are cash flows from operating activities, cash flow from investing activities, and cash flow from financing activity. So I won't want us to dwell much on it, because I want us to prepare, until when we want to prepare the cash flow statement, then we'll now expand on what all these operating activities, investing activities, what they mean. So we'll talk more on them by the time we are ready to prepare it. Okay, so meanwhile, I'm not sure if this picture is just a screenshot I did from the study text. It's a little bit dark, so if we can see it. So that I just want us to have a sneak peek of what the cash flow statement of a public sector organization looks like. So it starts with the cash flow from operating activities, and under that we have the receipts and then the payments. So for the receipts, the main source of receipts comes first, which are the statutory allocations, the value-added tax allocation, and then other receipts, taxes, licenses, fees, fines, earnings from rent, and so on and so forth. So they come next, and then payments after that. So all these are transactions that the organization is engaged in for that particular period that involves movement of cash, which means they actually received money or they actually paid out money. Okay. So, like I said, when we want to prepare it, we will now dwell much on it. We'll discuss more on it very well. Okay. So, Statement number 2 is the statement of assets and liabilities. This one is just like our regular balance sheet that we know, which is a statement that shows the assets that the entity have and the liabilities that is on their neck. All right, it's just like our balance sheet. It shows the asset and liability of that entity, whether it's a ministry, department, or the state itself. Also, statement number 3 is the statement of consolidated revenue fund. Now, this is an account that records all revenues of government. So, all revenues that government have in a particular period are recorded in the statements of consolidated revenue fund, except those revenues that have been designated by the Constitution or a law or another law of the legislature, that those revenues should be accounted for in another fund or in another account. It's only those revenues that will not be accounted for in the statement of consolidated revenue fund. Let me come again. Let me take that again. All revenues of government are accounted for in the statement of consolidated revenue fund, except those ones that a particular law, whether it is the Constitution or an act of the Assembly, have specified that should be accounted for separately. All right? It's only those ones that will not go to the consolidated. All others will go there. And so, therefore, since it is where all their revenues go to, definitely all the expenditures of government as well are usually drawn from term. It is like the statement of profit or loss of the government using cash basis. So it's like their statement of financial performance or statement of profit or loss, as you may want to call it. Okay. Also, statement number 4 is the statement of capital development fund. This one, it is where the funds that government use for bridges, schools, roads, hospitals, and so on, capital expenditures, the funds that government use for capital projects, this is the account, this is the statement where they account for it. So all the monies that they want to use for capital expenditure will enter this account as revenue into the account, and then when they now spend it, it will enter as expenditure from that account. Okay, so if I take that again, what I'm saying is that statement of capital development fund records transactions that has to do with capital expenditure, capital projects of governments, in simple terms. So, and the main inflow into this account is usually from the CRF. You know, we say CRF is where all revenues of government go to. So it is usually from the CRF that governments will now transfer some fund and say, go to capital development fund. Like this, let me give an analogy. You collect your salary and your salary enters your first bank account. Your first bank account is what? Is your CRF. That is where your salary goes to. Your workplace pays you, they want to pay you vehicle allowance, because your first bank is your salary account. They still pay it into that salary, into that first bank. They want to pay you leave allowance, they pay it there. They want to pay you study allowance, they pay it inside the account. That is your CRF. Now, because you have so many expenses, you now decide that, okay, I have a building project that I'm planning. Any money that I want to use on that building project, I don't want to mistakenly spend it. So you now transfer it from your first bank account and open one GT account and say, this is where I'm keeping the money I want to use for my building. That's your consolidated, that's your capital development fund account. All right. So you now decide that, okay, I want to have one where I'll be using to buy stuff and other things. So it's just a way of transferring fund from one account into another account to account for it separately. So that's why we said the main inflow into the capital development fund account comes from the consolidated revenue fund. Okay, I believe that is clear. So you can see this is also a snapshot of what the statement of assets and liabilities look like. Start with assets, and then the liquid assets come first. So now if you look at this, there's a slight difference. You know, we said the statement of assets and liability is like the balance sheet that we know. But if you look at it, there is a little difference. And the little difference is that in our regular balance sheet that we know, the non-current assets comes first, Abi. And then we now have the current assets. But in this case, the liquid assets comes first. Then you now have other assets will now follow it. Okay. Now, then liabilities will now follow. So it is liability and equity. Now, equity in this case, what represents equity in the case of public sector? You know, in private, for a private concern, your equity will now be your share capital, reserves, retained earnings, and so on. Now, for a public concern, they don't have share capital. Their capital is the fund, is the public fund which they are using to run that government. Okay, so the public funds like the Consolidated Revenue Fund, the Capital Development Fund, the trust funds. I believe we have talked about funds in our previous classes. The trust funds and so many other funds that government may have. So those are what will form the equity. That is the public fund of that for that account, and then it will be followed by other liabilities like the non-current liabilities and the current liabilities. So the long-term loans, external loans, all those loans will follow, then followed by other liabilities and so on. So after that, okay, we also have a snapshot of what the Consolidated Revenue Fund account looks like. The statement of Consolidated Revenue Fund, you know, starts with the opening balance, that is the balance from the previous period, then followed by the revenue for that period, and then the expenditures. So the revenues will come with the major ones, which are the FAC revenue, that is Federation allocation, the VAT allocation, and then followed by other revenues like taxes, earnings, royalties, mining rents, and so on and so forth. All other revenues that government may have will now follow. Then after that, followed by the expenditure. The expenditure will now be less from the total revenue. And then after that, you now have the balance. Okay, so also, what do we say? Okay, the statement of capital development fund. A picture of the statement of capital development fund as well, where we say it accounts for the funds that are to be used for capital projects. All right. So it also starts with the opening balance, the balance in that account will start, then the inflow into that account will follow. So you can see that the first item of inflow there is what? The statement, the transfer from Consolidated Revenue Fund, transfer from CRF. That is the major source where revenue, where fund is usually allocated to the statement of capital development fund. And then so other sources might now be in form of maybe specialized loans that are taken for capital development, or special grants that are taken for capital projects, and so other things like that. Before we now have expenditures, the expenditures now are mainly those that involve capital projects. On no account, you must not make that mistake of posting an expenditure that is not meant for capital projects into the capital development fund account. Okay, so only expenditures that involve capital projects will now enter into the capital development fund account. Okay, so that is the format of how the statement of capital development fund looks like. Now, any questions before we move forward? Do you have any questions? Hello, are we together? Are we still together? Okay. Okay.
So what is promissory note?
Pardon?
I said, what is promissory note?
Promissory notes.
Yes.
Promissory notes is a form of liability that government have. Okay, like a form of document that government issues to make a promise. I mean, how do I put it? Like a commitment to fulfill a particular expenditure to somebody. So it's like a form of liability for government.
Okay, okay. Okay, sir.
Okay, so since we are, let me quickly scan through YouTube. Maybe if you don't have any questions that we need to attend to before we now move into because I want us to attempt the question on this cash basis tonight before we move to the accrual basis. Okay, I think there's no question. Okay, somebody is asking for the chapter where this chapter is in the study text. I think it should be chapter 21 in the current study text. I think chapter 21, if I'm right. Okay, so I want us to look
Please,
at.
am I the one that's not hearing him again? Because I cannot hear him more. The network is bad somehow.
Maybe it's the network on your side.
We can hear you clearly, sir. Very clear. Maybe it's a network, bros.
Okay. Okay. Let me see the diet for the question that we can look at briefly. Okay, this question on May 2017. Question 1. So if you can open our Pathfinder to where we have May 2017 question 1. May 2017. Can we all access our questions as we are on the call? Okay. Mr. Kabiru, please don't mind me. I want to ask a question. Is Mr.
Go
Kabiru
ahead.
with us?
Go ahead, I'm with you.
Please, is there a way I can be sharing two different pages on my
Side by
computer
side,
together?
right?
No, what I mean is if I want to move, like now, the screen I'm watching on my system now is not the one that is sharing. And I want to be moving from the page of the question to an Excel page I want
Okay,
to
so
open. I want to open an Excel sheet,
okay.
and I want all of them to be sharing each time I move to that particular page.
Okay. So you do that by sharing the entire screen. So on share first.
Okay. So I should do stop presenting again. Okay.
Stop presenting and share again. So you will now see, by the time you're trying to share, you will see 3 tabs up. I think the last one by the right should be the entire screen.
Okay.
Click on that.
Entire screen.
And then
Okay. Okay, thank you. Is it showing, sir?
it's not sharing yet. Did you click? You will click
I've clicked it. It's saying presentation is starting. I think it's loading. It's trying to load.
So it will share.
Okay.
It's taking time, but
okay. In that case, maybe okay. Since all the students also have the question with them, maybe I can open the question on my phone too. I'll just be sharing the Excel page that I will be showing the solution. I think that will,
what
instead of
happened? Is it
waiting.
not sharing?
Yes, it's saying presentation is starting and it's not. Come on, maybe I should cancel it and start again.
Please start again. I don't think it should be that difficult.
It's the same.
The same. Is it? Can you just can you take the? Maybe you can use. You can screenshot and send to my WhatsApp. Let me see how is it shown.
Okay. Yes. Let me snap it. Okay.
Or you can use your phone to snap it. But I think if you are using your WhatsApp is on this, just send screenshots. Just do the screenshots.
No, I'm not
And
using.
your WhatsApp
I'm
is
not
on your system.
using. No, it's not on my system.
I use your phone to snap. Let me see how it is showing.
I don't like that system thing for WhatsApp, Jerry. Here's your chat again.
Okay, let me chat. So you can chat now. Let's see. So which one with network?
I've sent you the image. You see where I circled is showing, that's what is showing. Presentation is starting.
Let me see. Presentation is starting. So you didn't click on, did you click on share?
Yes, I did.
Okay, so I think what I've seen now is that you see after that entire screen, that particular this thing, you have to click on it first.
The particular window. Okay.
Click on it. So you click on it before you share.
Okay, yes. Somebody's talking. What did you say?
Oh yeah, it's sharing now. Show my screen anyway. Click on show my screen anyway and hide it.
Show my screen anyway. Okay.
And hide it.
I should hide.
Go scan that one that is showing on the hide it, yes.
Hide, okay.
Then you are fine. You can move between screens now. It's showing your entire screen.
Okay. Yes, the person that was speaking, hope is not a problem.
Continue, it's not a problem.
Okay. So this is the question that we are about to look at. This is question 1 of May 2017. And it is on preparation of financial statements using cash basis. Okay. So I'm going to open an Excel sheet where we can put our solution also. Okay, so now let's look at the question first. The question is about Calabar State. The balances are starting from the books of Calabar State government of Otan as at December 31, 2015. And we have been given something that looks like a trial balance for that state. And we have additional information about three of them. And the requirement says we should prepare the following statements for submission to the Auditor General for the state. Number 1, Consolidated Revenue Fund account for the period ended December 31, 2015. Number 2, Development Fund account for the period ended 31 December 2015. And thirdly, statements of assets and liabilities as at 31 December 2015. Now, the B part of the question is asking the components of general purpose financial statements of a typical federal or state government. These are what we mentioned earlier. And I believe this question is referring to the cash basis as well, since the A part of that question asks for cash basis questions and cash basis statements. So here you are expected to mention these same things that they mentioned above, and then all the others, notes to the accounts, statistical reports, statement of accounting policies, and so on. Okay. Then the B part, the C part is asking for the principal users of government financial reports and their needs. This is in our, I think we talked about this one in our 4th class. We talked about the users of accounting information. Okay, so we talked about the internal and external users. I believe you remember all that. Okay, so let us just go straight into the preparation of this account. The entity we are preparing for is Calabar State. So let's quickly bring up the name. Calabar State, and what we are being asked to prepare The first one is Consolidated Revenue Fund account. Let's just copy this one and put it. Somebody is raising hand. Please quickly speak up.
I can't see the screen. No, I don't know. Maybe it's only me.
Okay.
I think it's only you.
It's your network.
It's not only she, we cannot see it.
Is it the Excel screen you cannot see, or
I
the
can see
We are
the
only seeing your
screen.
picture.
It's
We
only
are
your
I
only
can
picture we
seeing
see
are
your
the
seeing.
Excel.
You can see you.
We can
Has
see
it
their
stopped sharing?
network.
I can
I
see
can
the
see
Excel.
the
The
I
Excel
can
is
see
broken.
the
I can see you.
I can see clearly.
I can
it's their
see
network. It's their network.
We
It's
can
not
see
so
the
clear.
Excel sheet.
Okay, good. Okay, let me even increase the fonts that I'll be using. And then let me increase my screen size. Okay, good. Okay, so we'll be having here will be our particulars. Here will be for our figures. Okay. Now, let's go right into it. Our first thing I'm preparing is statement of consolidated revenue fund. Now, this is a technique, the technique you use to prepare financial statements. Whether you are preparing for public sector or for private sector, there's one technique that you need. And that technique is that you don't have to cram the format. Okay? What you need to do is first understand what that particular account you are preparing, what it is. By the time you understand that account, you understand what is supposed to be the content of that account. So it is what you know that is supposed to be the content of that account that you go and be searching for from the information you are giving. So even if you are giving 10 pages information, as long as you know the account you want to prepare, you understand that account. You know what that account is supposed to contain. You will not have stress. You will only go to that information and be searching for those items that you already know you need. Now, in this case, we are preparing a statement of consolidated revenue fund. We have said earlier, this is a statement that is supposed to contain the revenue and expenditure of government. Their revenues and expenditure. All their revenues and then all their expenditures is what is supposed to be contained in this account. So we just go into our question. I'm going to be searching for revenues and expenditures that we can find. All right. Meanwhile, we already know that this account is supposed to start with the balance at least in the previous year. Okay, so let's just start with the balance in the previous year. And we have been giving that one in our question here, where it said consolidated revenue fund as at January 1, 2015.
2015.
Okay.
120 million.
Please mute your mic, sir. Thank you. Okay, so balance brought forward 120,000. Okay, this is supposed to be in millions. Okay. Maybe this one. This is May 2017, question 1. Okay, so now we already have the balance, we have our opening balance now. So what we need to do next is go and find all the revenue. Okay, let's start revenues. So let's find all the revenues together. So from the beginning, the way I my own technique, the way I usually prepare my accounts is that any account that I want to prepare and they give you trial balance and then they give you additional information, I will usually start my search from the additional information so that I will not pick one figure in the main trial balance and then forget that there's an additional information that relates to it. So I usually start from additional information and see if there's any thing I need for this particular account I want to prepare here. So we said we are looking for revenues first. So let's look at these additional information. They are just 3 in number and see if there is any item that looks like revenue in it. The first one is that 40 billion should be transferred to development fund for capital projects to be embarked upon in the first quarter of 2016. So this one, I believe, does not look like a revenue. It's saying that money should be transferred to development fund account. And like, if you remember, we said when we were talking about capital development fund account, we said the main source of inflow into the capital development fund account is for the consolidated revenue. So this one is even telling us that it's telling us about what we move out to the from the CRF to the capital development fund. So we don't need this one now. It's not a revenue. Number 2 says other charges approved by the fund management committee and paid during the year, but which were omitted from the books, amounted to 50 billion. So this one is also telling us that there is an expenditure that they incurred during that year that was omitted from their records. So this one too is even an expenditure, does not look like a revenue item. Fine. The third one says total grants of 100 billion collected. Wow, this one is collected. So which means it's something that comes in, okay, from federal government. Okay, we receive money from federal government, okay, for capital project. Wow. So for capital project is already telling us that where is this? Can somebody quickly say it?
Development.
Thank you very much. Capital is going to capital development. So this one also is not an item for CRF revenue. So which means out of these 3, no one concerns CRF revenue there. Okay, now we can now. What's happening? Okay. It seems well. Okay. I was trying to scroll up and it's okay. Okay, so you can now search for our revenues from the trial balance. All right. So let's look at those items one after the other. There are not many, so we can just quickly look at them. So the first one is the cash account. Cash, we know, is not revenue, is an item of what? Assets. Consolidated revenue fund balance, we have used that one. Allocation from federation accounts. Now, this one is telling us that this is money that comes in from federation accounts. How much is that? 300,000. So allocation from federation accounts. $300,000. Okay. Next one, we have other revenues. Okay, these ones are also revenue. And how much is that? 40,000. Other revenue, 40,000. Okay, let's see if there's also any other revenue. Personnel cost, that's an expenditure. Ordinary shares, deposits, advances, loans from federal government, loans to local government, fixed deposits. So there is no item that looks like revenue anymore from this trial balance. So it looks like we have exhausted all the revenue items. So we can total that, what we have. We can total what we have already. And then, okay, so we have 460,000 total revenue. Let's give it by 2. Then we can now look at the expenditures. Now, so talking about the expenditures, let's look at our additional information again. If there is any item that looks like expenditure, okay. Now, from the first one, number 1, 40 billion should be transferred to Capital Development Fund. Voila, that's our first expenditure, telling us that 40 billion need to move out of the CRF, the Consolidated Revenue Fund, and go to where? The capital expenditure. All right, are we together? So that will now move, transfer to capital development fund. Okay, and that is 40 billion. So 40,000. Okay. Then our next item, the second additional information, is talking about other charges approved by the Fund Management Committee that was omitted from the books. So which means that this transaction has happened, but they didn't record it at all anywhere. So we now treat it the way it should be treated. If it has happened, if the transaction happened, if it's going to be treated normally, what they should do is to record it in their CRF. Okay, so we just record it in the CRF, 50 billion naira other charges. Other charges, 50,000. Okay, Sophia. Oh.
Okay, good evening, sir. Okay,
Good
so
evening.
can you?
Yes, we can hear you.
Okay, so I noticed that you've been posting the amount for million naira, but the additional information is saying billion. Is that not telling us that we are meant to post it as 40 million instead of thousand?
No, if you look at the top of our accounts, we have abbreviated in million. We didn't abbreviate in thousand. If you look here, you see that we abbreviated in million. So if you add this million to this thousand to give you billion, is that clear?
Okay, yes, I can get that. Thank you.
Okay. So the third additional information here, like we have all agreed that it should be treated in the Capital Development Fund. So which means it does not concern this account that we are currently preparing. So that means we have exhausted the additional information. Now let's go into the main trial balance and look for, what are we looking for? We are looking for expenditures that are supposed to go into the Consolidated Revenue Fund. Okay, let's start again. Cash account, consolidated revenue, we are taking that. Allocation from FAC, we are taking that. Other revenue, we are taking that. Then personnel costs. So these are expenditures, these are expenses of government that are withdrawn from where? No other place than Consolidated Revenue Fund. So personnel costs. The person raising hand, can we be very quick about it?
Okay, sir. Sorry, sir. I just saw the additional information. I thought when you are explaining to us, you told us you use the salary account as an example, that all the money will come into the CRF. Why is it not coming? So please just explain a little bit, sir.
Okay. Remember I said that all revenues of government goes into the CRF. except those revenue that there is a law that is already backing that revenue should go into another fund. Okay. Now, if you look at this one now, it's telling us that is a grant that is given from federal government for capital projects. So that grant is already a specialized grant. I think there's a topic that we'll talk where so something about grants will be discussed. There are different grants. We have general purpose grants, we have specialized grants. So specialized grants are grants that are tied to a particular purpose. They are tied to a particular purpose. So, and they must be used for that purpose only. They cannot be used for any other thing except what it is tied to. Those are specialized. So in this kind of transaction is a specialized grant tied to capital project. So it cannot go into the CRF where they will now use it to go and buy popcorn and biscuit and ice cream or whatever. It has to go to where they will use it for what it is meant for. So that is why we are not accounting for it in the CRF. Exactly.
Yes, sir. Thank you, sir.
So now we have entered our expenditure, the third expenditure into the CRF, which is personnel costs of 150 million, as we have seen here. 150 million personnel costs. Okay, so let's look for any other expenditure: ordinary shares, deposits, advances, loans, fixed deposit. No more expenses. So it means we have exhausted all the expenses as well. And then we can have the total of these to be I hope this raising of hands will not be delaying also. So this is our total expenditure. Let's put it here. And then we can now deduct our total expenditure from our total revenue, and will now give us the CRF balance. This minus this. Okay, so this is our balance carried forward. Okay, I believe the preparation of that is clear enough. So before we move to the next account, you can see like two people raising hands. Please quickly.
Please, sir, why is the loan to government not under expenditures? Because there's the part where there is loan to local government. Is it not an expenditure?
No. If you give loan to somebody, okay? If you give loan to somebody, it is not an expenditure, because what it means is that the person is going.
Get it back.
You get your money back. It's not an expenditure. Expenses are things. They are things that you cannot get back. If you pay for electricity, can you get your money back? If you pay tax, you cannot get your money back. If you pay transportation, you cannot collect back your money. What it means is that you have received value for that transaction and you paid for it. So, but in the case of borrowing money to somebody, you are not receiving any value from the person. You are only you are giving a loan to the person and you get your money back even with interest sometimes. So it is an asset to you. That transaction is an asset to you, because what it means is that person is owing you. So it's not an expenditure. All right. So the only place you can treat giving out loan like something that, like the way you are saying, is when you are treating cash flow statement, you treat it as an outflow. Cash flow statement is not taking care of whether expenses or income. It's treating inflows and outflows. Money goes in, money goes out. So if you give loan to somebody, it means that you have given out money. Money has gone out to that place. So cash flow statement, we treat it as an outflow. But normally in an account like this, giving out loan is not an expenses, it's an asset. Okay.
Sorry, sir, let me contribute.
Okay, thank you.
Thank you very much. I really appreciate your class. I'll be missing, but tonight, I think from going forward, I'll be joining this class. So even the expenses we are talking about, or the expenditure we are talking about here, is purely recurrent expenditure, because at times the question can be tricky. They will put capital expenditure here, and it's not going to be used because they can tell you that the state government or whoever, the government has procured so, or they have paid for a motor vehicle or they are constructing road or whatever. You cannot use that type of expenditure. So I think that one will go to Capital Development Fund. So because we are talking about a consolidated revenue account, and it's purely for recurrent expenditure and recurrent revenue. That's my contribution.
Thank you very much. Thank you. Okay, so now the next preparation is the development fund account. Okay, okay, sorry.
Yes,
I can't
Philemon.
Yeah, Philemon. Okay, please go ahead. Good
Maybe
evening.
let me go to what the person said, then before I ask my question.
Okay, very quickly.
Yeah, if a transaction is being given, is for you to consider the accounting entry for it. Because when you are giving out loan, you are debiting the person account and you are crediting your asset. You are debiting your asset account. So you have to think about the entry, not just this format that is here. So I think that will help you. Then the question of which I want to ask, please, can you clarify a little bit the difference between federation account and federal government account or consolidated revenue account?
Okay. I will let me spend just a few seconds to say that. Federation, because even though we are drifting from this particular topic, well, let me quickly say it. Federation accounts is the account where all the revenues that belong to the entire federation, that is all the 3 tiers of governments together, the revenues that belongs to all of them, it is the federation account that those revenues are accounted for. So the federal, state, and local government, the revenues that belong to the 3 of them, that the FIRS or the customs, the NNPC or whatever collects on behalf of the entire federation, like the crude oil sales, like the VATs, like the stamp duties, and so on. When they collect it, it is accounted for in the federation account. Now, the consolidated revenue fund account is where the revenues that belongs to a certain government is now being accounted for. So the different tiers of government have their own consolidated revenue fund. It is called consolidated revenue. When they say something is consolidated, it means it brings in everything, it's merge everything together. So consolidated revenues, all their own revenues. So the federal government now, in their own consolidated revenue, they have their own share that they get from federation account, put it there. The revenues that they make from other sources, they will put it there for federal government. The state governments too, when they share FAC and they give them their own share, whatever they collect, it will go to their consolidated revenue fund. And then other internally generated revenue too will also go there. So that's the difference. The federation account accounts for all the revenue that belong to the entire federation. The consolidated revenue fund account accounts for the revenues that belong to a particular government. That's the difference.
All right, thank you, sir.
So we can only have one federation account for the whole federation, where we go and share the money for all of them. But each levels of government have their own CRF. Good. So going to the next one we are asked to prepare is the capital development. Am I right? Yes, development fund account. So development fund account, as we said earlier, is where revenues that belong that are meant, where funds that are meant for capital development, capital projects are being accounted for. So we need to look into these our accounts and look for transactions that involve capital projects and enter into our development fund accounts. Of course, we'll start by bringing where we say is the major source of inflow into this account is from where? The CRF. So we have a transaction where they say revenue is transferred from CRF, and which is the first additional information there, that 40 billion naira is transferred to development fund account. So we go to our development fund account. Let's bring in this again. Okay. Transfer from CRF. And that is 40 billion. Okay. Then we can now bring in other inflow into the development fund account. If you look at this one, the second additional information is talking about other charges. This is not a capital development transaction. And then the third one, where we have the 100 billion grants from federal government meant for capital projects. So this is where we can now bring it in into the capital development fund account. So say grants from federal government, which is 100 billion. Okay, so we can now go back into our trial balance and see if there is any other transactions that have to do with capital development again. Okay. Let me permit me to pick into. I want to. Let me do a quick amebo into the YouTube and see if there is any question that I missed. I'm not even seeing their comments again. Okay, let's continue. I can't find their comments. Okay, so let's look at our trial balance and see if you have any capital expenditure, any item of capital transaction. Our consolidated revenue, allocation from FAC, other revenue, personnel, we have used all these. Ordinary shares, deposits, advances, loans. These are non-capital expenditure item. Okay. So, which means there is no other capital expenditure item in this question. So we can sum up this. Can sum this up. Okay. Sorry, we should have added revenue here. I show that these are our revenues, and then expenditure. So expenditure, I believe, is nil because I'm not seeing any transaction again that has to do with capital capital project. So the total can now be said this is this minus this. So balance carry forward. Okay. So which means we only have 2 items of revenue into the capital development fund account, and no expenditure were made in the capital expenditure during that period. So let's look at the third item we are asked to prepare. The statement of assets and liabilities. Statement of assets and liabilities. Okay. Okay. Now, like I said earlier, that what you need to do is just understand each account and understand what their content is supposed to be. The statement of assets and liability that we said earlier is supposed to contain what? The assets and the liabilities of that entity. Okay, so let's now look at this trial balance that we have. So we need to start our this statement with the assets, and not just the assets, we start with the liquid assets. Okay, so let's look at the liquid assets that we have. From our trial balance, you can see our trial balance is even starting with cash accounts. So the number one liquid asset that we can have, cash. Okay, so our cash account here is showing 60 billion in cash. However, this 60 billion, we need a little bit of adjustments in our asset and statement of assets and liability. What adjustment? Why should it need an adjustment? Let's come to our additional information. The first additional information in the second additional information, we are told that there is a transaction that they omitted from the books. So what it means is that at the end of the year, when this states, when they prepared, when they were closing all their accounts and rated this trial balance that showed that they have a cash account of 60 billion, the cash balance of 60 billion in the bank. As at that time, they have omitted this particular transaction of 50 billion. So what it means is that these 50 billion have not reflected in that on the generation of that 60 billion which they claim is in their account. So we need to effect that 50 billion on their cash balance, because this transaction is saying that other charges are approved and paid and they were omitted. So which means they actually paid 50 billion naira in expenditures, but their transaction was omitted in their books. So we need to effect it in the books by doing what? By removing it from their cash balance. If you look at the third transaction as well, the third information here as well, is saying that grant of 100 billion collected from federal government for capital projects was not recorded anywhere in the books, which means they also collected 100 billion that they refused to record while claiming that they have 60 billion in the bank. So we need to effect these two on the cash balance. So let's do a small working below here. Working cash. Okay. Somebody is raising hand. Please let's quickly do this working before. So cash. We have a balance of 60 billion before, and then there's other charges of 50 billion, and they need to remove minus 50 billion, and then they add grants from federal government, which is 100 billion. So if they add all these three together, it means that they should be having 110 billion in their bank accounts. So cash balance should be 110 billion. So which means here we are going to have cash account 110 billion. So the person raising hand can go ahead now.
Okay, thank you, sir. The question I want to ask is this. You said it is assumed that 50 million was omitted from the cash that it has been approved and paid. Is that not? So what if somebody is on another school of thought, or somebody is also assuming that the balance or that transaction has happened, or the balance, the 60 million, the transaction has already happened before you have that 60 million? Can you look at it from that angle also, that 60, that is what I'm trying to say, that is the money will be 110 million, that after the 50 million, that the thing now remain 60 million? Is it possible to reason it from that angle? I don't know whether I get my point.
I didn't get it very well.
What I'm trying to say is this. You said that we need to deduct that 50 million that for other charges from that, the amount of cash that was remaining at the end of the period. And I'm saying that what if somebody also assumed that the expenses have been made, that the money will have been 110, that is 60 plus 50, that the 60 now is the remaining balance? Can you or can someone reason it from that angle?
No, it is not an assumption. That what we're doing is not an assumption. The question specifically stated it that.
Okay.
Specifically says that they had other charges that has been approved and paid. Okay, it said
yes,
approved and paid during the year, which were omitted. Look at it here. It said which were omitted from the books. So which means they did not record it at all for them to arrive at that 60 billion. They did not.
Sir.
They did not treat this. Also, this one was not recorded anywhere in the books. So which means these two transactions have never been considered for them to arrive at that 60,000. So
thank you very much. It's okay.
Effect it. Okay.
Thank you, sir.
So we can now move ahead with. So we have treated the liquid assets, which is the cash. So we can now look at other assets. Other assets. Now, let's go back into the question and see if there are other assets. So we have treated cash, CRF, and then the CRF balance at the beginning of the year. We don't need it here. Allocation from federal, other revenue, personnel costs. Now, so part of the other assets that we now have are the shares that they have in another company. So the state government invested in shares in one company. Okay. Now, which is 150 billion. So shares in Accra PLC, 150 billion. Then let's look at others. We have deposits, we have advances. Okay, if you look at these two, deposits, advances, do we have assets among them?
Yes, sir. Advances.
Advances are assets. Okay, why do you think so?
They have a debit balance.
Good, thank you very much. So in the two, if you look at it, you might be like, deposit is supposed to be an asset now, or advances, what is advance? So, but because they have been able to present it in a trial balance format, and you understand the fact that once you have the debit balance is an asset, if you have the credit balance is a liability. Okay, good. So which means our advances of 80 billion, advances 80 billion. So next one, loans from federal government is not an asset. Loans to local governments. Now, this is what somebody was talking about before. So this is where we treat it is an asset. So loans to local governments, and that is how much?
Hello,
Also
sir.
80 billion. Yes, sir.
Hello, sir.
Yes, go ahead quickly. Go ahead quickly. So we also have fixed deposits, which is also an asset.
Hello.
Hello. So which is how much? 60 billion. I think we should let's quickly round this up. It's almost over. Let's quickly round this up before we can now take questions altogether. Okay. So any other assets? Let's look at it. I think we have exhausted the assets. So the total of these. Okay, let's bring out this here. So the total of these is 480 billion. That's total assets. Okay. Then we can now have liabilities. So for the liabilities, we have the public funds and then the long-term liabilities and the current liabilities. Okay. So for funds, public funds, so for public funds, if you look at this question, we have two funds already, which are our Consolidated Revenue Fund, our Capital Development Fund. Okay, so our Consolidated Revenue Fund, the balance from our Consolidated Revenue Fund is how much? If you look, go back up and check, which is 220 billion. So from our funds, we say Consolidated Revenue Fund, which is 220 billion. Then our Capital Development Fund, our development fund balance. The balance for my development fund is how much? 140 billion. 140 billion. Okay. And then okay. You can now have other liabilities after taking care of the funds. Let's go back into the question. Other liabilities, from the additional information, we don't have liabilities. Okay, so from the trial balance, we have, if you check it from our credit side of the trial balance, you can see deposits of 60 billion. And then, okay, we want to start with the long-term liabilities. So the first, for long-term liabilities, we have loans from federal governments, okay, which is 60 billion. And then that's the only one that looks like long-term liabilities here. So we can now take our current liabilities, and then that will include deposits, which is also 60 billion. Okay. So if you add these two together, it should give us 120 billion. And if you do a sum of this with the funds ahead, let's close this one. So if you do a sum of this, the fund, you can have 480 billion. So our assets total assets is equal to our total liabilities. So, yes, somebody was raising hand earlier. Can we have your question or comments? Thank you, John. Somebody was raising hand earlier. Can we have your comments quickly? Yes, Wulafe, Babatunde, and Sophia.
Okay, sorry, sir. My question goes thus: you initially brought the deposit as an asset. Why did you bring it back again as a liability?
No, I never brought deposit as an asset.
Okay, but I can see fixed asset here. Fixed deposit, sorry.
Yes, there are two different things. Okay, let me explain what those two means. How those two are different. The fixed deposits is talking about fixed deposits. You see that they mention the location of the fixed deposit, Lobo Bank. What this one means is that this state has a fixed deposit. They have some sum of money, 60 billion naira, kept as a fixed deposit in Lobo Bank. It's their property. Do we all agree? So it's in Lobo Bank as a fixed deposit because they want to earn interest on it. So that's why that one is an asset. Now you see this one that they say deposits. You know that normally it is possible that deposits can mean asset as well. But in this case, the first clue you will have is that you see that they place the figure under credit side. Now, if it is an asset, the figure will not be on credit side. So for it to be on credit, that means it's a liability. And that means that probably that states have maybe a financial institution that is run by the state where they hold deposits for people, maybe like a form of a mortgage bank or a microfinance bank. I don't know. For whatever reasons, it means some people are depositing some funds with that government. That is why it is a liability. You know, for banks, you know that banks, the money that we keep in banks is a liability to those banks. It's our own asset, but it's our own liability. So the same thing applies here. Those monies were kept with the state government is a liability for the government. And that is why they put the figure on that credit side. So for you to see the figure on the credit side, you already know that is a liability. I believe that is clear.
Yes, sir. Thank you,
So,
sir.
Mr. Wolafe, I think I've raised your hand for quite a while. Okay, let me check YouTube. I'm seeing a question on YouTube. I couldn't answer it earlier. Okay, I will send the file to the group after the class. I will send the file to the group after the class so that we can go through it. I'll send the Excel file. Okay. Mr. Wolafe, go ahead and have a question.
Hello, sir.
Hello. Please go ahead quickly. Our time is fast spent.
Okay,
Okay. Somebody from
sir.
the Yusuf
Thank you
said.
for.
Okay.
Thank you
go
for
ahead.
today's class, sir. We really appreciate, sir. Hello.
Yes, I'm with you. Go ahead. Go ahead. We are listening to you. I think his network is bad. Okay. Enoch and Enoch, please. Let's have your hand. And Azan, let's have a question. Quickly.
All right. Good evening, sir.
Good evening.
Yeah. My question is on this fixed deposit. to
Okay.
Lobo Bank PLC. And this, in respect to this question, is not having any interest attached to it. What if a question is having an interest attached to it? How are we going to treat it, sir?
Meaning that they have earned interest on it.
Yes.
It will be treated as a revenue in the Consolidated Revenue Fund.
Okay, okay, sir. Thank you, sir.
Good evening, sir.
Good evening.
Thank you very much for your effort. So, sir, concerning these deposits or advances, like if it's on the trial balance, the posted or the right deposit on debit side and credit side. So we are going to determine which one is asset, which one is liability.
Yes.
Okay. Thank you, sir.
By putting it on the debit and credit side is already a guide for you to know that this one is an asset, this one is a liability. It's like a form of they are giving you a clue, like a clue like that. So they expect that if you understand the rule of double entry, you understand that this one is asset, this one is liability. Okay. But if they put it on a straight line, if they put everything on the same straight line, I believe that they are going to, they will not just mention deposit, they will include something that will make you understand the kind of deposit it is, that the reason why it should be a liability. They will include another additional facts to it, or the advances, they will include additional facts that will make you understand if it's a liability or an asset. You understand?
Can you hear me, sir?
Yes, sir.
Yes, go ahead.
Hello, sir. Can you hear me?
Yeah. Yes, I can hear you.
Yes, sir.
Hello, can you hear me?
We can hear you. It's like this man's network is not really good. You are the one that is not hearing us. We can hear you clearly.
Hello, sir.
We can hear you. We can hear you. Please log in and log out. I'll be log out and log in.
Okay, so I have a question I want to quickly
Thank
take
you for
from
today's class.
YouTube.
Please, what I just want to ask is concerning the asset and liability.
Okay.
Where you put under the fund, under the liability fund, you put the balance from the CRF.
Oh, it's like his network has gone again. Okay, let me quickly take this question I wanted to take from YouTube. The question said that the additional information one.
So what? Hello?
Okay, go ahead.
I feel Mr. Olabi should type his message.
Your network is
Should
giving
type
us
it.
problems. Maybe you should type your question. Okay. One question from YouTube says that additional information one was transferred to development fund. That shouldn't we also remove it from cash? That is the question from YouTube by Hassan Sanusi. Now, my response to that question is that that transaction has already been treated by whoever is the accountant of that state that generated this trial balance. They've already treated that transaction. Okay. Before they arrive at that 60 billion. Meanwhile, you should also note that that 40 billion have not been spent. They only moved it from one fund to another. So which means that that cash of 40 billion is still with them. They only move it from their first bank account and keep it in their OPay account. So the cash is still with the government. All right. So it's like you moving your salary, you move part of your salary from First Bank and then you put it in your PalmPay so that you can be using it for transaction in the market. So your money is still with you. You have not spent it. So it's the same thing that played out in that additional information number one. So that's why we can't remove it from cash again. All right. Okay. So why the balance carry forward of CRF and Development Fund were treated. I can't find this question again. Okay. Were being treated as liability. Why the balance is okay. In the balance sheet that we know, or statement of financial position that we know, it has two parts: assets on one side, and then the other side is what? Equity and liability. You see those balances of funds, they are like the equity of the government's concern. They are like equity, they are the fund balances. They are like the capital of government. The balances in their fund balances. I mean, the balance in their fund account is like the equity, it's like their own capital. So that is why it is part of liability. It is like equity and liabilities. So the fund balances are their own equity. That's the answer to it, Mr. Olafe. Okay, so I think we have taken all questions. And okay. Okay. So many people are asking about this, why fund is in the equity and liability. So I think I've answered it. This is like the equity of the government sector. I see have people raising hands. As Juliana Jediran, can we have a question quickly? We have just 2 minutes to close this. Let me call in Mr. Kabiru.
Okay,
So that
sir.
I can
Thank you very
close
much, sir.
the recording.
Can you hear me, sir?
Yes, go ahead, Juliana.
Yes, sir. Thank you very much, sir. My question is, under the ordinary share, the one that has 1 naira with it, are there some questions that require us to do something about it, or is just something that we just overlook?
Except if the question specifically states other things that you need to do with it. What you need to do here is to just state it. You know that those shares are not. Yes. Sorry, please mute your mic. It's resounding back. Thank you. So you know that those shares are not the shares of who are we preparing for accounts ourselves? Kaluba State. Those shares are not shares of Kaluba State. They are shares of Akran PLC. They are shares of a company. That's the shares we have in that company. So it is the value of that share that we only need to bring here. We're just accounting for our own assets, the properties that we have all around. So we remember that, okay, we bought some shares in Akran PLC. So what's the value of those shares that we have bought? 150 million. Then I don't think this syllabus includes us to be valuing those shares and calculating the value of those shares. What we need to do is they have given us the value of the shares already. So just bring in the value into our own accounts.
Okay, sir. Thank you very much.
You're welcome. Is Hassan Abba still want to ask a question? Was the only one that answers? Hassan Abba?
Yes, sir. My question has been answered.
So, Mr. Kabiru, please be prepared to stop the recording. Go ahead, Hassan.
No, my question has been answered, sir.
Okay, it has been answered. All right, good. So,
we can end the class.
Yes, we can stop the recording and end the class now. Thank you very much, everyone. So by next class, we'll be looking at the accrual basis parts of preparation of financial statements for governments. So I'll be sending the Excel file of the solution to the WhatsApp group for us to look at it again. So good night.
Thank you so much. Thank
Good
you
night,
so
sir.
much, Mr. Abdulaziz. Everyone for your decorum.
Good night, sir.
See you guys in
Thank
next
you.
class. Rest of your night.
Thank you, sir. Good night.